Financial Planner. Follow us on YouTube.
Delve, it pushes trade war with China threatening the world's trading system. Let's get into the economic collapse financial news. Now, we've been following the economy and all the different statistics that the government, the central bank, the BLS, and the rest throw at us. And, they manipulate these numbers. We've delved into them. We've basically uncovered what is really going on here. And where you're starting to see a clearer picture that they are continually manipulating or massaging these numbers to fit their story, when the real story is the economy is falling apart. Now, every month we know that the government, the BLS, they put out this information and they tell us that inflation is still running at 2%. Janet Yellen comes and saying this is perfect. We're trying to get inflation up, but it's very, very low. And each time they come out, they tell us what the inflation rate is. This week, they're reporting that the year-over-year inflation is around 1.9%. Now, we know that this is a complete lie, because what they're doing is they're manipulating the information. And when we look at all the information and we look at what is really going on, we can see that certain things, certain areas of the economy are seeing inflation, like the stock market. I mean, think about it. From 1929 to 2007 levels, we see the stock market has increased from 70% to 129%, and it's even gone even higher than that today. And that tells us that we're seeing inflation. We're also seeing inflation in housing, in college tuition. We're seeing inflation in automobiles. We're seeing inflation pretty much everywhere, but they're telling us that there is no inflation. Now, what's very interesting is that the real median household income, well, they came out, the corporate media was out there saying it just surpassed the level achieved in 1999. Think about that. Think about it for a second. It took 17 years for the average American family to get back to a household income of $59,000. The $59,000 of household income in 2017 doesn't quite go as far as it did in 1999. With even less manipulated inflation showing an 87% increase in medical costs, an 80% increase in energy costs, a 51% increase in food costs, a 53% increase in housing costs, and a 115% increase in college education. And of course, the BLS changed their methodology, boosting household income by $1,700 in 2013. So in reality, it is still below the 1999 levels. Now let's look at some examples here. The average price of a new car in 2000 was $22,000. Today, the average price is around $34,500. That's a 57% increase. The BLS, well, they're reporting that new vehicle inflation is whopping 2% since 2000. They've adjusted away 55% of the actual increase by saying airbags and other unnecessary technologies basically improved automobiles to such an extent prices didn't really go up. And new vehicles account for 3.6% of the CPI calculation. Another crazy example of underreporting inflation is the highest weighted category of housing. It's supposed to reflect the cost of rent and home ownership. The owner's equivalent rent calculation is purposely opaque in order to suppress the true cost increase. Now, median home prices were $165,000 in 2000 and currently $317,000 today. That's a 92% increase. The average rent back in 2000 was $475, and it has risen to $910 today. That's a 92% increase. So it makes total sense for the BLS to report a 53% increase in housing since 2000. I mean, see what they're doing here? They're manipulating these numbers. Let's look at medical care. Medical care advancing by 87% in 2000 sounds substantial, but that only equates to an annual inflation of 3.5%. And we know that this is much, much higher, just like everything else. And if we look at the shadow stat numbers compared to what the U.S. is putting out there, we can see that inflation is not 1.9%. He's calculating inflation around 6% right now. So they're trying to convince us and trying to convince the public that we're not seeing any type of inflation. And when we start to look at all these different things, we're seeing inflation everywhere. And remember, when the entire petrodollar system starts to fall apart and these countries don't need to hold on to these dollars anymore, we're going to see a devaluation of the currency, and we're going to see inflation shoot up. We're going to see it go from 6% all the way up to who knows what, because it's just going to get a lot better. Now, of course, what they're going to try to do is they're going to try to manipulate these numbers and make it seem like we're not seeing inflation at all. Now, we have a major pension storm headed our way. And when we look at the pensions, and we discussed this before, private and public, most public pension plans are not fully funded right now. And when we look at state and local pensions, and we look at the unfunded liabilities, they have roughly quintupled in the last decade. Not doubled, not tripled, not quadrupled, but quintupled. And that's nice when you're, have an investment. That's nice when you have, when you hit the lottery or you hit big in the slot machines. But when it comes to pensions, that's not good because you owe money. And when we look at the pensions, we can see that they've taken on a lot of debt. Now, according to a 2014 Pew study, only 15 states follow policies that have funded at least 100% of their pension needs. And that estimate is based on the aggressive assumption of pension funds that they will get their predicted rate of returns. Now, a lot of them are based on 6, 7, 8% type of returns. But what we're seeing right now is that the pension liabilities, well, they are out of this world. And we can see they're continually moving higher and higher. U.S. state and local pensions, well, they see their debt swell to almost $2 trillion right now. We are in big trouble. Now, here is the truth about pension liabilities. Let's assume you have $1 billion in funding today. If you assume a 7% compound return, about the average for most pension funds, then that means in 30 years that $1 million will have grown to $8 billion. Now, what if it is, what happens if you're getting a 4% return? Using that rule, guess what? The $1 billion grows to around $3.5 billion, or less than half the future assets in 30 years if you assume a 7%. Remember that every dollar that is not funded today means that somewhere between $4 and $8 will not be there in 30 years when somebody who is on a pension is expected to get it. Worse, without proper funding, as the fund starts going negative, the funding ratio actually gets worse, sending it into a death spiral. The only way to bring it out of the death spiral is with huge cuts to other needed services, with like massive tax cuts to pension benefits or something like that. Now, pension trustees, they don't face personal liability. They're literally playing with other people's money, and they don't really care what happens because they're not responsible for it. And some try very hard to be realistic and cautious, others don't. But even the most diligent can't control when the next recession comes. They can't control when the stock market crashes. They can't control anything. But it gets worse. Many state and local governments have actually 100% funded their pension plans. Some states and local governments have even overfunded them, assuming that they're going to get their projected returns. And what this really means is that the unfunded liabilities are more concentrated, and it's going to be a complete disaster. So we're headed down this path where we're seeing that the pension systems, both public and private, they're going to be in trouble. We're seeing inflation, and the interest rates, they're not going anywhere. They're not getting that projected rate of return. This is a complete and utter disaster. Now, Jim Rogers is out there, and we know that Steve Mnuchin and Trump and the rest of his administration, they're looking to go after China. And, of course, this has to do with North Korea, and they're trying to place sanctions on China and North Korea. And we can see right now, if this does happen, Jim Rogers is out there, and we mentioned this before, he's saying this is going to hurt the United States. The U.S., if they impose economic sanctions on China, well, it's going to be a problem here in the United States. So what's going to happen? It will bring the whole world economy down. And in the end, it will hurt America more than it hurts China, because it just forces China and Russia and other countries to come, they come closer together. Now, is this part of the plan? Is this part of the plan to bring the whole entire system down? Well, China is now warning that if the United States does this, this is going to be a threat to the world's trading system. And the United States is going to be in a lot of trouble. Now, this is one way to crash an economy. And it looks like we might be headed in this direction. We see Lighthizer, he's saying that we need to have a change in trade policy, because the trade policy that we have today, guess what? It's not going to work anymore. They know this. Lighthizer says the U.S. can compete if conditions are fair. What he's really saying is that right now, the dollar is dying, trade is no longer going to work, and things have to change. Lighthizer says he and Trump believe the U.S. should be more proactive in trade policy. Everything that's been put into place has to change right now. We need to bring back manufacturing. We need to join the new trading system. We need to get rid of NAFTA. We need to really look at what's going on right now, because everything is moving from the west to the east. There's nothing that can be done. Everything is in motion. Everything's been duplicated. And right now, the system is deteriorating and falling apart very, very quickly. And there's really nothing that they can do about this, because they cannot bring all the manufacturing back to the United States before the economy collapses. It's completely impossible, because remember, the cabal, they've been working at this for a very long time, taking the manufacturing base, taking our production, taking everything here in the United States and moving it away from the United States, because they understood that the dollar would no longer be the reserve currency of the world. So if you look back in time, since the 90s, this is when this has all really started, because they realized they only had a certain number of years and they knew how much time it was going to take, and they realized they needed to do this type of maneuver because they were trying to make basically a globalist system where every country was going to be the same. It didn't matter where the manufacturing was, because they were going to eventually bring back the third world nation back to the United States. And this was their plan. Now their plan is down the tubes. And what do we have left here? We have nothing. And to bring everything back in this short period of time, it's not going to work. And this is why they're putting a lot of pressure on China right now. And it looks like to me that they're ready to bring the system down. There's no way out of this. The whole thing needs to be rebooted. The whole thing needs to be brought down. And by doing this, and as we know, we are a service country. We're consuming right now. And how in the world, if we place sanctions on China and we stop them from delivering products to us, how does this help the United States? It doesn't. It makes the situation worse. It collapses the entire system. Actually, it gets rid of the funding to the cabal. Because when the system goes down, guess what? They're screwed. They can't do anything right now. So we can see that we might be looking at the first steps to bring down the entire system. And it looks like we're headed in this way. And remember, the central bank is also trying to bring down the system, but they don't want to be blamed for this. Doing it this way, it looks like they're setting it up so the central bank is actually to be blamed, because the United States can't survive without getting the products in from China, by stocking the shelves, by people going out and purchasing. Because once that is halted and we try to manufacture, we try to export, the entire country cannot be sustained on this. Not at this point. So this looks like this is the first step to bring down the system, and it looks like they're pushing this agenda. This is why you need to be ready and prepared.